Okay, good morning, everybody. We are just going to give in a few minutes to allow a few more people to join. We've got a few participants. We are expecting a few more. You know, it's not unusual that people join a bit late. So I'll just hang in there for a few more minutes. Just another minute or two. How are we doing? We're just about there. I've got an awful lot to get through, so maybe what I'll do is I will start. Firstly, some basics. We are going to use side-by-side view, so if you've got that set up on your system, that's great. This session will be recorded and it will be available on our website and on our YouTube site, maybe not this afternoon, possibly tomorrow, but if there are any points that you miss, if you're rushing to take notes, then you can go back and watch it again and pick up on the points. We are asking everybody who wants to ask questions to use the chat part of Zoom. Those questions will be repeated back to me at the end of the session when we will do a question session if I haven't gone over the time limit. I seem to have given myself a lot to do today, so we'll see how we get to. There will also be some questions throughout. I think we've got 3 or 4 questions, so it's slightly interactive. There'll be some polls which we'll be asking you to answer. Your answers to the polls are anonymous, so that's good. Right, we've got a fair few people on now. I think we're going to kick off formally. We've been waiting a little bit for people to join, but let's get going. We have, interestingly, quite a lot of new people joining. This is the 4th in our series. There's some names and people that we haven't met as a business before. So if you don't know who we are, ICSR is a consultancy which has been set up as a sort of antidote to the types of consultants that are in the market who like to charge large fees and aren't particularly pragmatic in their approach. All of the people within ICSR come from the market. Importantly, we don't have any timesheet targets for anybody. We don't have any billing targets for anybody. We are focused on finding solutions for our clients using people who come from the market and have experience in the market. So that's who we are. I've done pretty much that introduction now, so we'll move straight on. I want to do a recap because we have got quite a lot of people in. I don't want to spend too much time on this, so I will rush through, and I apologize to those who haven't been at our earlier sessions. Sorry, I forgot to say earlier, those earlier sessions are on our website under the news page. They're also available in our YouTube page, which you can access via the news page. Operational resilience. First started with a consultation paper which closed in October 2018. Then in December 2019, we received a policy statement. It was a joint policy statement from the Bank of England, the FCA, and from the PRA. That joint consultation paper with the policy statement has closed. It closed on the 1st of this month. The next step is a policy paper which we are expecting in Q1 of 2021, so next year. It's important that everybody understands when they're looking at the policy statements and the consultation papers that the PRA and the FCA are providing a consultation across the industries that they regulate. So it's banking, it's investment, it's wealth management, and it's insurance. So the language that they have used is not particularly helpful when you're trying to work out some of the things that they want you to do. And we'll try and clarify some of that as we go through today. Again, by way of recap, Solvency II firms are subject to the consultation and will be subject to the requirements, and so will SMCR enhanced scope firms in the FCA. So CAS large firms, intermediaries with more than 35 million in revenue on a rolling 3-year average. And there's the question of groups. So groups who may not have that individually as regulated entities may have decided that they want to be treated as an enhanced firm. If they have decided they want to be treated as an enhanced firm, then the requirements of operational resilience may apply to them. All right, what is it? Again, this is recap. This is an approach to dealing with disruption that covers across risk management, disaster recovery, business continuity. And it starts from the point of view that disruption will occur. And what it requires is that firms are able to ensure that where there is potential significant harm to customers, then they will be able to provide continuity as service. And it brings into being two important concepts. One is an important business service. And these are services, we'll talk a bit more about it later, but these services that are provided to end users, they in the chain of activities that make up that service must be identified. And then the ones which are critical to delivery of the service have to be mapped and have to be operationally resilient. And the way that a firm has to achieve that is that they have to have impact tolerances. Those tolerance levels must be monitored, and firms will be expected to ensure that they don't go beyond the tolerance levels. So the firms, after they have done their project and put in place their operational resilience framework, are going to have to ensure that they invest in the ability to make sure that services aren't impacted above those tolerances. All right, so we have, helpfully or not, from the PRA and FCA, different definitions. Those different definitions simply come from the fact that the two regulators have a different focus. PRA obviously on prudential, FCA on customers and the market. So that's why we have different examples. That's why we have different interpretations. But the key thing from the PRA point of view is that they define it as a service which a firm provides to an external end user. An end user is absolutely key as we look at what might be or might not be an important business service. The FCA is services which, if disrupted, would most likely cause intolerable harm to consumers or market integrity. And that end user piece is absolutely key. So if you look at examples on the banking side, you have the ability for an end user to withdraw cash or check their account balance. From the PRA point of view, they're looking at the question of payment services, again, by banks, payment of annuities by life insurers. They are looking specifically at how you provide your services and what you provide to those customers. The PRA make it clear, and this is something we'll come back to, that it's not about a line of business or a product. It brings into being a completely different concept that we've dealt with in the insurance world. Importantly, it's a matter of judgment for boards and senior management to determine what they consider to be an important business. And most importantly, boards have to document in an auditable manner their justification for inclusion or exclusion of services or activities from their definition. So we're going to go and look at quite a lot of that and what may or may not fall in later on. Another important thing is the question of internal services. According to the PRA, these are unlikely to be included, but as we'll see later, that may not be necessarily the final position. So we have come up with a question of proximity. We think that one way of working out whether or not an activity forms a part of an important business service or not is the proximity to the delivery of that service. You know, that means that not everything that could potentially cause harm to a customer is going to be within the definition of an important business service. And one of the examples that we have used for our clients is the difference perhaps between when you are paying a claim. You may look at all of the activities within your organization and decide that some will or some won't be. And you might conclude, for example, that the manner in which you undertake your investments is not related to whether or not you can pay a claim, but the question of how your treasury operates and how it ensures that it has available cash to pay claims might be. But we use that proximity test. I'm not saying whether or not that's the case, but we think that it's unlikely that you would come to a conclusion that investment services, internal investment services, which aren't provided to an end user, were in some way related to an important business service. Investment has its own requirements under Solvency II. There is the prudent persons principle as well that applies, and we think that those are sufficient regulation for you to say that's not relevant to the mapping process that you need to undertake. It's not relevant to operational resilience. It could cause disruption if it all goes wrong, but there are different rules for how to deal with that. Right. So we're moving into, that's the end of the recap. If anybody has any questions, please do use the chat process. We're moving on to what you need to do. And the phase one really is to scope your project. You need to have, this is going to be a large exercise for a lot of the larger entities. Even for medium-sized entities, this is going to be quite an exercise because it's entirely new. You know, you may know how generically you provide the services, but you probably won't have something that would meet the PRA or FCA's requirements for an appropriate mapping of how you provide those services to your end users. So scoping a project is key. You want to have a project initiation document. You want to have timetable, Gantt chart, and the like. And you need to have, as you would with a normal large project, a governance and reporting process, comms plan, and cost assessment and planning. At that stage, you want to start to think about your operational resilience framework. You want to conceptualize what BAU is going to look like at the end of the project and how it's going to be governed. You want to start to think about, in fact, you need to work on it very, very early, a definition of what important business services might be and a high-level understanding of the harm that may be caused to end users. Excuse me for a moment. And then you need to consider creating a strategy document because, as I said earlier, the key is that you have to document, the board has to have a document that evidences how it has decided what is a service, what is an activity, which should be included and which shouldn't. And the consultation papers say that the manner in which the board has decided that must be logical. So starting with a strategy document, starting with a definition of important business services is absolutely key to how you get this project going. And then you want to start the process of thinking about how operational resilience will interplay with day-to-day activities in due course. Because as you go through the project, as you start to map your important business services and map the relevant related activities, you'll need to start to think about what functions are going to have to provide MI to you. And as you go through that process, it's worth thinking about what that framework is going to look like. I've said it before, I think I'll say it again. The absolute earliest that you can possibly engage your board is critical, because they are the people who are going to have to make the decisions. And most importantly, they're going to have to be the people who are going to sign off on the costs of the project. So it is critical that you engage them early and you give them an idea of what you think it's going to cost, how long it's going to take, and what work streams are required, and what resources are required. So that leads us, interestingly, to our first question. I think we're going to get that up now. Ben, here we go. The question is, if you've already initiated your operational resilience project, is this sponsored at board level? So we're going to give you a minute or two to, wow, okay, that was interesting. We've had, I don't know if you can see this, but we had 100% hit rate almost instantly on the answer yes. I'm not supposed to be influencing you on this, but it's changing now. I'll give you another 30 seconds, please, to complete this questionnaire. So there's half of you have done it so far. If the other half could answer the question, that'd be great. 15 seconds. 5 seconds. All right, we'll stop that. Okay, and the results, well, that's interesting. We started very early on with 100% saying they had involved or sponsored this project at board level. We're now down to about 50%, which means that there's a senior executive somewhere not at board level who is sponsoring the project. Okay, that's quite interesting. We'll move on now from that. Ben, if you can take that polling away. Ben? Okay, I've done it. Right, so we're going to go on now to the actual process, which doesn't seem to be working for some reason. I'm sorry, everybody. We seem to have a technical problem with moving this forward. I think this has happened in previous events where we have had a poll. There we go. Okay, cool. That's it. Sorry about that. A bit of my lack of experience possibly in Zoom. So we're now at the actual process of mapping, which is taking us to the crunch pieces. So for us, where there is a few steps which are diagnostic, I've talked briefly about these, but the diagnostic piece is key for getting your mapping right. And the first thing you want to do at legal entity or line of business, it doesn't matter which you choose at this stage. Ultimately, when you map, you are going to have to map against legal entity because it has to be reported on legal entity basis. But if you map on line of business, then you can come back and separately have a cross-referencing process to legal entity. But what you want to look at is the services which you are offering to customers and end users. You want to identify the activities that are related. I said we use the proximity test. I think it's very worthwhile using that test. It's not the legal test of causation, but it is simply you take a view as to whether or not the activity itself is sufficiently proximate to the IBS and to the possibility of disruption and or harm to customers. Then at that point, once you've identified the activities and the services, again at a high level, you need to give yourself a concept of whether or not the potential impact of a failure of that activity could cause harm to the end user. And with that, with those three pieces of information, you're then able to take a view and to adjust. If you've already come up with a high-level definition of important business service, you're then able to adjust that and decide whether or not your initial assessment of what should and shouldn't be included within the definition of important business service, and what activities should or shouldn't be mapped against a particular service. So that diagnostic test is absolutely key. You then create, or our process has been to create a template map for an important business service. We would recommend that you complete that template as a proof of concept, and then you're then ready really to use that as a template or a proof of concept across the board for your mapping exercise, and you can start to undertake the mapping of all of your important business services. The question is really what needs to be mapped, and the PRA and FCA expect that mapping will be against people, processes, technologies, facilities, data, and third-party arrangements, which are outsourcing requirements. And the granularity of that mapping is going to be what is necessary in order to identify the activities which, if disrupted, could cause harm. And you go back to that first definition and you use that definition throughout your mapping exercise as you do that. And remember, it's not all of these activities or the processes or the technology that are potentially going to cause harm. They have to be mapped in any event. So once you've got your definition of an IBS, an important business service, you have to map all of these activities and these requirements against that. But they may not necessarily all produce harm. They still have to, however, be mapped. We're going to move on to our second question now. For those who have already started their mapping, or even if you haven't, but you have an idea of what you're going to do, the question is, which of the following do you anticipate requiring the greatest level of effort to map? Okay, I've got 30 seconds. It's shifting around quite a lot this time. Okay, 10 seconds. All right, let's share the results of that, please, Ben. Well, there we go. So that's quite interesting. Data seems to have won the day. I'm interested by that. I'm a little surprised. I think processes could have been up there. Technology, I understand there's probably in some cases, only one or two systems that may be applicable. So data is interesting. Okay. Well, that gives everybody an idea of where they probably need to focus some of their attention during their project. TP arrangements, third party, that's outsourcing arrangements. It's there, but it's just higher. No, it's the same as technology. So I'm surprised by that. You may be able to identify your third parties, but under the consultation papers, you need to do much more than identify those third parties. You need to make sure that you understand their resilience as well. So there's quite a lot of due diligence there. There's quite a lot of work on third parties as well. Okay, we're going to stop sharing that and we're going to move on now. If I can, I hope that's gone for you guys, and hopefully we will be able to move on. Okay, we're back again to the problem we had last time. Right, there we go. Okay, all right, so now we're really into what does all this mean? We've talked a bit about what mapping might mean, and I've come to this from the point of view of the product life cycle. And the reason I've done that is because in reality, in the insurance sector, in our industry, market, whatever you want to call it, the service that insurers and brokers have historically provided to their clients is a product. And that product is an insurance policy. But that's not the way that the PRA and FCA are looking at this. And they're not looking at it that way because of the fact that they've had to use language which they can apply across a whole number of sectors of the financial services market. And so what we've got here, what we've got here is the product lifecycle. Okay, and this is a classic sort of format used. It's the format that most people have used for their product governance requirements, and it's the way that most people see products, the life cycle of products in this market. So not all of these activities, and we're going to delve deeper into this shortly, but not all of these activities are going to be an important business service. And not all of these phases of that product life cycle are going to lead to the mapping of activities. But they may do. And again, I will take the point that every business has to take its own view of what they consider to be appropriate or not. There is a rule of thumb that is being used in the market at the moment that insurance firms may have anything between 5 and 10 IBS. So as we'll see shortly, those firms that delve into a second or third phase of a particular phase of product life cycle may end up with many more than that, and it may actually not be necessary to do so. Pardon me. One of the interesting things that has come out of COVID-19 is that to a large extent, the FCA has provided a bit of a hint to firms about what may or may not be a critical or an important business service. During COVID-19, they identified those staff that they considered to be necessary and critical to the continuation of services who should still be continuing to work. And by identifying those critical staff, what they were effectively doing was identifying the critical services. Now, we're not saying you have to take that as the be-all and end-all of how you define your critical services, but it gives a very good idea. And the way they looked at it was that they thought that underwriters were critical. They thought that operational people who provided support to underwriting were critical. They considered those who were involved in claims critical. And they considered those involved in renewals critical. So those 4 areas were considered to be the key critical services that the FCA expected insurers and brokers and MGAs to continue providing during lockdown. All right, so let's have a look. Here is our thoughts, okay? And what we've got here are the elements of life cycle broken down a little bit, and what we see is product development, sales, distribution, servicing, claims, and renewals. So if we look, for example, at product development, actuarial, now these are only examples, so don't think that this is the be-all and end-all. These are just examples, but in product development, you might have an actuarial pricing assessment of the product. You might have the development of the wording, and of course, you will have an internal process to comply with product governance requirements where it goes to some committee and a product might be approved. None of those are services which are provided to an end user, but they are all activities which may relate to the delivery of a product. So the question for you might be, are they proximate enough to the actual delivery of the product of the service, which is, you know, that insurance policy. Are they proximate enough? They can cause disruption. We know they can cause disruption. I mean, wording development, product governance, COVID-19 is a cracking example of how things can go wrong in product governance. The products were simply not appropriately worded or sufficiently clear. They've ended up in the courts. So, you know, there is the possibility of harm, potential harm. There is the possibility, therefore, that customers won't get their payment as quickly as they might otherwise have got. So yes, activities, yes, harm. Are they an activity which is proximate enough to the actual provision of that product? Question for you to decide. KYC, customer authentication, same thing. So this is an internal process which may or may not cause harm. So the failure to properly undertake a sanctions check while writing a policy could lead ultimately at a time of claim to an insurer not being able to pay a claim. That is a disruption. That is a harm potentially caused to a customer. Is that activity, that internal activity, sufficiently proximate to the delivery of the service, which is the delivery of the policy? Again, you've got to sort of decide that one. Underwriting. I don't think there's any doubt that the delivery of a policy to a customer involves underwriting, and that activity could be considered to be an important business service. That is an activity that ultimately provides the product. So, you know, whether you define that as an activity or you define that as the IBS, it is, I would say, fairly critical. And if it's not available, then, you know, a customer may end up with no product. So if it's disrupted, there is an issue, and it could cause harm. So you would attach potentially to underwriting, if you decided that that was an IBS, you would attach fulfillment. So actually the issuance of the policy documentation. Now, development of distribution networks, that is relationships with brokers, that is cover holders, that is all of those sort of things. It's not a service to a customer, or not to an end user at least, but it is a fairly important activity in relation to the distribution of your products. And if you get it wrong, again, it could cause harm. Is it sufficiently proximate to the delivery of the policy? Question for you. While we're on this, it's an important subsidiary question on distribution for insurers is going to be who the end user is. And we are looking at this from the point of view of the relationship between the insurer and the broker or cover holder. So if at law you are delivering a service, you are delivering your policy, you are providing the cover as an insurer to a broker who represents the ultimate end user, then we consider that that is your end user, that broker stands in the place of the end user. They are representing the end user. If you are distributing through cover holders, they are your agent. And so the work that you undertake as between yourself and them is not a delivery of a service to an end user. It is development of the distribution network. It is what that cover holder is doing in delivering that policy, that cover to the insured, whether that's direct or otherwise. That is the delivery of the product to the end service, end user. Risk management services. So they are services often attached to an underwriting process. They may be during a policy period, undertaken during a policy period. Are they proximate to the delivery of that product? that policy, I should say, the cover that you are giving. Maybe they're not. Maybe, in fact, they are an entirely separate, important business service. And you need to consider things like risk management services and other services that insurers provide, and determine whether or not they're an activity related to a service, or whether they're actually an important business service themselves. The servicing midterm adjustments, again, underwriting is involved in many cases. Sometimes it's just automatic. It might be just adding additional insureds, or it might actually be changing the terms of the policy and the cover, in which case there is a proper underwriting exercise being taken place. That, one would say, might be an important business service, because you failed to get that right, or you failed to provide that as a service during a period of disruption, and there could be harm. But you may decide that actually midterm adjustments involving underwriting are a part of the underwriting process, and that the important business service includes that, and that underwriting of midterm adjustments is simply another activity relating to delivery of your original service, which is the cover. Claims, I would be surprised if there was anybody who hadn't decided that claims itself was an important business service. There are lots of activities relating to claims. There is the assessment, there is the payment. They are activities. We think that the provision of a claim service is an important business service. And by keeping at that level, you are going, so keeping at the claims, the underwriting level, you're going to be able to define your important business services in such a way that you can limit the number of those important business services. It may increase the number of activities that you have to attach to them, but again, that's part of the mapping exercise. So renewals, again, it's an underwriting, it's delivery of a service to an end user, and it has been identified as critical by the FCA during COVID. I don't think that there's any doubt that it is either a service or a part of or an activity related to a service. I've mentioned it previously, I'm going to mention again, all third-party outsourcing arrangements where a third party delivers important business services has to be mapped. And in this regard, sorry, as I was talking about claims, there were a series of activities there. There's cyber, you might have release of locked IT, motor, you might have roadside assistance, and travel, you might have repatriation or provision of medical services overseas. Each of those, again, you might decide are activities related to the provision of an important business service, which is a claim or a claim payment or a claim provision, or you might come to the conclusion that they are actually important business services in themselves. That is, again, a question of how you define your important business services. So we're going to move on. We're going to look, hang on, for some reason that's gone through to 2. Okay, I'm taking you back to that question of what has to be mapped, and we're looking at an example of travel. So in the travel sector, you've got here underwriting and the processes, and I'm just looking at the underwriting processes. You have the sort of activities, how do you collate the risk data? How is it provided to you? How do you review it and price it? How do you negotiate the terms of cover? These are all activities which will have to be mapped in some way when you're looking at the processing. Fulfillment, how do you issue the policies? How do you ensure that the invoicing is done and that the premium is paid? The data, you have to look at your sources of data. It might come from a broker, it might come direct, it might come from a cover holder. Each of the sources of your data will need to be mapped, as will, in fact, where it's stored. So data warehouses, they may be in India. Your operations team may be in Chelmsford, or your customer-facing team, it may be in Bristol. It may be, a tele-sales team or a tele-operations team. Your underwriting team may be in London, and then you've got to look from a facilities point of view at your comms. is data, is information coming to you via email, is coming by phone? Are there other sources? Are there portals that are being used? But all of these have to be mapped in relation to any particular important business service. People, so your functions are important. Just on the underwriting of travel, for example, you may have underwriting individuals, you may have operations people, you may have finance people involved, you may have actuarial people, you may have procurement if you think back to the fact that you are creating a distribution network. You may have legal, you may have compliance, or there may be a whole series of different functions involved in supporting the delivery of the original or the first important business service, which is that policy, the terms of cover. And then technology, again, you may have a whole range of different systems which are going to be relevant just to underwriting alone. So you might have an underwriting system. You might need that to link in with a finance system. You might have AI or RegTech. You may have portals. So you might deal direct with customers. You may use a portal for that. You may have a broker portal. You may have systems for sanction screening that you have decided that if you've decided that sanction screening and KYC are relevant to the delivery of a service, then you'll have to map the technology for that. You'll have Lloyd's central services if you're in Lloyd's. You may have binder management systems. You may use Atlas if you're in Lloyd's. You may be using PPL, and as I've already said, you might use your own portals for access for brokers or customers direct. And then you've got your third-party arrangements, and I've identified these already. You might have travel where you have repatriation. You might have roadside assistance. You might have medical assistance. Each and every one of these 6 categories have to be mapped for each and every one of the important business services that you have determined are critical to the delivery of an important business service, each activity, sorry. So that sort of sums up, that gives you a bit more depth about the thoughts that you have to have when you're looking at mapping and what you may have to map. And that's going to bring us to our final question. I seem to have actually got through this quicker than I thought I would. And that is what topics you would like us to cover in the future. So we're going to get that question up. These are other aspects which we haven't covered in our briefings. This is our 4th. We will probably have at least 2 more briefings, and we'd like everybody to give us an indication of what they'd like. We're assuming that many people are already into their projects. Probably we would have thought into the mapping exercise, possibly not into impact tolerances. We'll give it, we've got a little under half so far have filled the polling out. So we'll give it a little bit longer. Interesting. It looks like some people may actually have passed through there. Oh no, here we go. It's changing again. 10 seconds. Okay, right. Ben, can you share that, please? So scenarios and scenario testing. I'm not sure whether I feel that means that lots of firms have already done their impact tolerances or not. Our experience is that most people are still in the mapping phase because mapping could take quite some time. But okay, so we will take that on board and we will look at scenarios and scenario testing. We may come back to impact tolerances. Interesting that people don't want any or not much in the way of third parties. If you have other topics that you'd like, I should have said this earlier, but if you have other topics you'd like, then please use Zoom now to send us, please use chat now on Zoom to send us your ideas. So that is it. I think it's been quite a whistle tour. What we're now going to do is open up to questions. So, Ben, if you can close down that poll.
Kenneth, we've got one question for you so far.
Only one?
Only one so far.
Okay.
It's a relatively detailed question. There's a little background information for you first. I work for an insurer. We often do not deal directly with consumers, but through a distribution chain. The question is, how do we map and identify important business services when we don't own the retail relationship and are going through a large range of different distributors? Do we need to map the IBS all the way through to the customer? And do we need to work with distributors to set out their inputs and outputs into the service in our mapping?
So the answer is that, I mean, that's a question that you really have to decide yourselves. But the view that I would probably take is that you map to the phase at which you have delivered the service to your customer or their representative. So that means delivery to the broker. If you have a cover holder, then you have to map through to the cover holder because they are your agent and they are providing and they are delivering the service to the end user. And that end user may be a direct insured, if the MGA or cover holder is dealing direct with insureds, or it may be a producing broker to that cover holder. I think that's the sensible way there is, and I do know that there is an alternative view, and that alternative view, if you remember, I spoke earlier about who has to do operational resilience, and in the broking and MGA space, it is CAS large firms, it is those firms that have identified that they are an enhanced firm. So there is a suggestion that if you are dealing with enhanced firms, those with 35 million or more in revenue or groups, and you are delivering to them and they are representing the insured, then that's okay. But in the circumstances where they're not an enhanced firm and they are not therefore having to comply with operational resilience, there is an argument that you should actually map all the way to the end user. I think, for example, in UK retail, that takes this exercise into a realm which is well, it's probably doable, but it doesn't make sense to me. I think that once you deliver to a broker who represents an insured, that is your delivery to the end user, because the broker is representing that end user. And I think that the reason that only enhanced firms have to comply with operational resilience is because the FCA and the PRA have taken the view that at any other level, the risk is mitigated by the diversity in distribution. So that's my view. I hope that answers your question. Any more, Ben?
Kenneth, we do have another question for you. I've got a couple more. The next question is, how have you come up with the conclusion that you only have to map to the broker and not to the end customer?
It's a question. It's a question of law, really. I mean, your end user is the person you are interfacing with, who is the you know, it's either the customer, the ultimate end user, or you can take an interpretation that says, well, that person is representing, you know, your ultimate insured. And I think that it would be an extraordinary position if you had to map through 4 or 5 chains potentially to a customer when 3 or 4 of those chains actually represent that customer, and it is their responsibility to make sure they are able to provide the product and the services to the customer. The provision of your service is the provision of that policy to that customer, and you have achieved that by delivering the policy. It's slightly different when you get to claims. If you are dealing direct with a customer or an insured, I should say, on claims, then I think you do have to map that because you are providing that direct service. On the other hand, if you are providing delivery of a claim payment or delivery of a claim service via a broker who is representing that customer, then I think you are able to stop at that point.
Thank you. Next question, Kenneth, and your reference to claims is very pertinent there. It's another question from an insurer. I work for an insurer and I'm currently working on their operational resilience. Taking, for example, the claims process, this can vary between lines of business and a case-by-case basis. How would we approach process mapping where the process can be very ad hoc and can change on a case-by-case basis?
So that's process mapping. I think the answer to that is that one of the things that these requirements are going to drive is a greater level of mapping. So if you don't have process mapping for the processes, then I think the answer is that you are going to have to put in place the process maps, and you'll have to keep them up to date. And then the mapping of those processes will be mapped as a part of your op project, if you understand what I mean. So you will have an op-res map for your important business services and all of the activities. Within that, you have to map the processes, and that will form a part of your mapping for operational resilience. So if you don't have those maps, you will need to do so. I think that you can take a view on the generics. So if you take, for example, that claim payment or claim fulfillment is an IBS, and you then have a look at the variety of different activities, you may have 10 different ways that you provide claims payments to customers. Some may be through Lloyd's, some may be direct payments, some may be to brokers. Each of those is a different activity. You will have to map each of those separately. But you don't have to do it just according to each line of business. You may say, claims payment is what we do. That is an important business service that we provide to our customers. We just happen to have a different set of activities for the different way we do it. We map each of those activities separately. And the process for each of those activities will have to be mapped separately. So that's why it's a large job.
That's all the questions we have at the moment, Kenneth. If anybody's got another question, ask quickly.
It's not often that I finish on time. All right, well, thank you very much, everyone. Thank you for joining us. If you have any additional questions or we can help in any way, please do get in contact. We've got a good team working on operational resilience for clients, and we're happy to help. All right, thank you very much, everyone. Have a good day.